Well, hello members, and welcome to this week's edition of the Weekly Reviews, June 26th. As you know, we had a big drawdown on Friday, which ended up pulling the indexes back down a significant amount for the week, almost 2% here on the NASDAQ, 1.7, 1.6 across the board, negative across the board now on the year-to-date numbers, and this is what I've been trying to avoid. You see me being very careful in the portfolio, not taking large positions in individual equities, primarily staying in gold as the big trade, which of course did pay off on Friday given the Brexit news. So with the big declines, now the question is where do we go from here? So let's kind of review what has happened and probably what's going to happen as a result of that. You know, if you look at it from the broad perspective and you look at the indexes themselves, what you're going to see, of course, is a huge downdraft on Friday, and that's going to be a problem for a while to come. Because now we have this wide price spread, heavy volume on the daily charts, right? That shows up as this huge blue bar that you see, which is an anchor bar now. So you actually transition trend because you break this swing point low. This other swing point low is still holding, and of course this one is holding as well. But because it was sideways, when it breaks, and it breaks here, right, that transitions the trend back to bearish on this time frame. The other big piece of this is when you see a big bar like this, heavy volume, wide price spread, typically that's going to do one of two things. It's going to hold price for some period of time in this range, unless it immediately breaks farther and makes even a bigger one. In other words, if we get follow through come Monday, right, to where we get another bar, say down to here, right, then the overlap between these areas, or this zone up here, is going to become the huge resistance. And that makes sense because it will be bearish retest, regenerates as this thing comes back. So follow through Monday is probably the most bearish thing you can get. If you instead get some sort of a hold here, right? So in other words, if price holds on Monday, then we'll have this range, even if it gets underneath it but then comes back over and closes somewhere inside of it, then you'll have this range that's probably going to hold for some period of time. What's the most likely scenario? Well, in my opinion, it's probably that latter one where this thing's going to try to trade lower and eventually bounce back up into here on a weekly basis and maybe even on the daily basis. So that's what I'm looking for or thinking. And this is hugely bearish in multiple ways. One, what you see here, but also if you pull it over, you put it on the weekly, what we saw play out last year, right, the huge rise and then the spike down and then eventually the crumble again, right? That scenario looks almost identical again so far. So in other words, if we're looking at this and we're looking at this range just like we saw back here, that range is playing out the same way as it did last year. Now, I'd caution that the biggest difference now is that the market actually looks better from an internal perspective right now, but that can change. And it may change, but it's probably going to take time. So let me have you focus on one other thing here in this chart, and I want to kind of point it out play by play. So the big move up, right? The big move up here, same thing. Then what do? You get a fast, correction on a 1 week basis, and then a bounce back the very next week. Well, here it's a slower correction and then the bounce back. Then you get the sideways bars. That's these two bars, right? Those look almost exactly the same. Then you get the push down. Well, in this case, you got sideways for 2 weeks, and then you get the push down that takes place over 2 weeks. So still, same sort of scenario. And then what happens? Another bar that tests up and down. That would be this week if it happens that way. And then another climb back up. So if we're going to see the same sort of scenario, what we should expect is more volatility this week, and then some sort of another climb back up, which if it fails, right, can lead to the big spike down. And so my guess is that this is playing out the same way, and it actually makes sense because the internals support the idea that this is not going to roll over and do this big crash right now. More than likely, you're going to see some sort of a bounce develop over the next 2 to 3 weeks. And then you have the potential, especially if it climbs back up into this area, you have the potential for the big breakdown. So that looks to be the scenario once more, just like it was last year. So again, to recap this idea, the most bullish scenario is for this thing to actually test, get underneath Friday's lows. So let me go back to the charts here as we go over it. So to test under Friday's lows, get under them, test these swing point lows and flip back above them and hold, right? Then you can get the push back up. Now, where would that push back up take us? You know, the ideal scenario would be, actually not ideal, but the scenario that one would expect would be what is now the bearish retest regen off this break that just took place, right? And that top of it would be fair game. That price point is about 2057. The other price point is this higher volume bar that you see here, the low of that bar, which is 2062. So if I'm drawing at an area that I would expect to see price push back into, it would be right into that area. So that to me is a decent bounce, which is the setup for someone to potentially look at the short side of the equation if they want to. And so that's how that sets up, and that's how I expect that we'll probably, you know, that to me that's the most likely scenario that we'll see play out. If we look at the, you know, the most bearish case is that the selling, well, short term, the most bearish case is the one I told you, and that is it just blows through all this. That will actually set up a bigger bounce if it happens. But the more bearish case, if it's to take place, would be a push back, right, where this doesn't even get under the lows. So in other words, we come, let's say we gap up on Monday and we start pushing up, right? That's probably going to be a weak bounce with a further push to the downside. So, you know, the most bullish case, get under this and back over it, test it immediately and get back over it. That could lead to a bigger bounce, could take us back up into this area I just talked about, these two price points. Worst case, you know, you just keep going down. That will lead to a bigger bounce when it happens, but of course it's going to be a lot of pain if it happens. And the other more bearish case actually, because as you rise here, you don't have the opportunity to buy anything. So, and you know, it's going to be hard to sell anything because the bounce is not going to be very much probably before it just cascades down again. So all three of those scenarios are on the table. The more likely one in my mind is that you actually get under this and back over it. So you open up with some fear on Monday, and then you see the buyers start to come back in, would be my guess. Okay, so back to the notes here. So that's the most bearish. The pattern I was just talking about is there. You know, the problem with what has happened now on Brexit is that, you know, and I talk about here in the opening paragraph, is that you kind of got, you know, a scenario where what should have happened is that the uncertainty would have gone away. Unfortunately, with the vote being as it is, the uncertainty is back on the table. In other words, you may see Scotland do something. You may see Italy. You may see France. You know, all these things now create more uncertainty as to what's going to happen in the following months, which is going to limit any upside potential in Europe, probably in Japan as well, because the yen is going to be a go-to currency now. And that's going to continue to put pressure on our markets, and we're not going to be able to lift as a result of it. If you look at what happened, that divergent behavior between the S&P and the NASDAQ has continued. It's just gotten worse. And so as you see the push down here in the NASDAQ, you can really see it on the NASDAQ weekly chart. The weekly chart is already into that big bar. If you look at that bar for the S&P 500, if I put the weekly up on the S&P, you know, it's not even into that bar. Here's the bar on August 24th. So, you know, the divergent behavior is very different between the indexes. And if you move over to the NDX, it's even more stark, as we've known now for some time. The NDX itself is much more bearish than the other markets. It's getting ready to break into that bar as well. And this would be an ABCD structure to the downside. It's not big. This is the one that I was just kind of talking about. I wouldn't be surprised to see it get down, finish off an ABCD structure at the beginning of this week, and then bounce around back to the upside, allowing the S&P potentially to get under those lows and then bounce back over them either Monday or Tuesday. 45.74 is this top. The top over here as it bounced up was 45.36. So you got about a 40-point difference. If you take that off of this, that gets you down about 42.42. That's where you'd expect the bounce to come from. And so we're not talking about that much lower, 40 points. Yeah, if it tries to extend and do this little ABCD structure. And just so that you can see it more clearly as I talk about it, we're talking about from here to the low, back up to this high, and then back down to about there. So it's not a big one, right? And that would set off that, get you a bounce, and then try to do it again. So that's the way the NDX lines up, and being the weakest one, it's the one to watch. European banks totally demolished on the Brexit news. I mean, they just blow this thing away. Just like the pound got pounded, you got the same thing here with the financial sector in Europe. If you look at it on a weekly basis, blows away the lows. So you've got two time frames, lows being blown away on both of them. That suggests that what you're going to see is continuation in this sector. It's not going to be able to lift at all, hardly. And the result of that, of course, is continued pressure on Europe in general. So I think that's a big thing to be aware of. And the other big thing to be aware of is the dollar. Now the dollar is going to try to push higher. So as the dollar attempts to push higher, as it did here on the daily, if you pull it to the weekly, it's inside this little range at the bottom. But if it sets up the ABCD structure, which is most likely going to occur, the dollar is going to push, push the difference here between these two lows now. 24.12. This low here is 23.96. So the take and put on about 20 points to the top, that gets you up to about 25 or so. So the dollar is going to push up into the top of this red zone that you see, potentially getting into the wide price spread overlap here. So if I look at all those things together, what we're going to see is that we're going to see these things start to work out. Most commodities are probably going to begin, right, these continuation moves, they're going to begin to unfold. In other words, if I'm looking at, let's just grab, let me see here, let me grab just a broad market index of commodities like the GCC. So we're going to see this come back because it's coming back after more than 6 bars. We're going to probably see a bounce as it enters into these swing point highs that were broken, bounce back up, but then get totally stymied around 20 and a quarter or so. And so things like oil, like copper, like all those industrial type metals, they're all going to get hit. XLB is going to have a tough time. All those kinds of things are going to play out. Precious metals themselves, different story. Now, I think what you're going to see is you're going to see gold out move GDX. So GDX is going to continue to have pressure just like you saw here on Friday, whereas gold itself is going to try to extend farther. And so that's one play. And then the other play to look at is bonds. And bonds themselves are going to try to move higher. And I suspect utilities also will be the same story. So, my take here is that these things, as the dollar moves higher, you're going to see the strength move elsewhere. Those things that have been strong because of the weaker dollar are going to get flipped around over the next week and a half, 2 weeks. So you don't want to be playing in those spaces. In particular, my portfolio has some of those on. I'm going to be looking to unwind those, and you shall probably do the same thing. On the sector view, if we look at the sectors themselves, the transports had been one of the weakest sectors. They were one of the ones of the few, actually, that had turned bearish on a long-term time frame. Well, you see it breaking here on the daily. It's breaking on the weekly. And the long-term I was just talking about is already bearish. So you're bearish across all time frames now with a breakdown on 2 time frames, again, simultaneous. That suggests that we're going to see continued pressure in this sector. Some of the early earnings and the warnings have come out in this sector. I don't think that's going to change as the earnings season goes on. So FedEx had a tough time. We saw WERN warn. We also saw another company report. All of them getting hit. I think this sector is going to be under pressure, and it's probably not a sector you want to be playing in. But the other thing to look at in terms of sectors is those things that are coming back now to do bullish retest regenerates on the weekly time frame are the ones you want to focus on. Look at the SOX. Look at the basic materials. Look at the XLI, right? The industrials, and focus on these as they come back in and do their bullish retest regens. If you look at technology, it's already done it, and technology has failed. That's a bad thing, right? You get over here, you failed under it the first time. You come back up into that area. I mean, look at this closely. This is classic. This is the way it works. You have, I always say it's an early warning system. So the bullish retest regen, and let me do it this way. I'll just draw it in so you can see it clearly. The bullish retest regen is here. When you get over something, a swing point high, you want to see it extend, because if it doesn't, you don't have much room to hold. Gets under it here. What does that tell us? It's an early warning system to say that more than likely the up that was going on is probably going to be sideways. Well, what happens? It's exactly what happens. This becomes more of a sideways market. Now the danger is you break this swing point low and you set up a move lower. And then this becomes a bearish retest regenerate on the way back up. And so you see this over and over. These patterns like this play out over and over. And they make sense when you think about what they're doing, and they're easy to identify and use to make sense of what to do in terms of your trading. So the XLK is telling us that it's already weaker, and more than likely we're going to see those other sectors, in particular like SOX, probably fail to hold their bullish retest regenerates. Then we have something like the consumer discretionary, which to me is a big problem. You've already got, even if you use the old terminology, where it was a series of lower highs, lower lows. Here's a high, a low, a lower high, a lower low now, right? So you have kind of the old terminology of what a trend is. In our terminology, we already knew it was still sideways, and now it's bearish. This is a problem sector. And the reason this sector is a problem sector is because look at the S&P 500. Discretionary, technology, financials make up the bulk of that sector. We already see discretionary having problems. We just talked about the XLK failing to hold a bullish retest regen. Here's your financials. Financials never even got over a bearish setup, right? They're coming back. They're still going to try and come back eventually to test this low probably. And so you've got the major three sectors in the S&P 500 all struggling. That says the S&P is going to continue to struggle. And one thing I pointed out a long time ago is that you're going to see probably a decade of this. It's not going to go away soon. We're not going to have this market just leg to new highs most likely. And once again, we see the failures taking place at the highs. What's the coming focus? It's going to be, this uncertainty that's off this Brexit vote. The earnings are starting to do the same now. They're being sold, not bought. The early ones that have come out so far, I expect that's going to continue to happen. Those hit in about 2 weeks. I just talked about 2 to 3 weeks down is when we expect maybe the real break to take place. So maybe we kind of grind higher into earnings and then give it up. And then I would look for the central banks this week to start talking up everything, or at least attempting to. And if the market doesn't pay attention to them for more than a few hours, that's going to be another key that is going to get tougher on the next few weeks. Bottom line here, Brexit took everything by surprise. And I think that 2 to 3 weeks out is when we're going to see the larger move, not immediately to the downside if it's going to happen. Potential scenarios, last week, totally wrong in terms of the expected outcome. The most bearish case played out almost exactly to the forecasted price point, and that was to get back to the May 20th swing point low. What's the best case? I think just to push back into that area I've already identified for you, the 2057, 2062 area. Worst case, they just take out the May lows and keep going. The more likely case is that we get down into this area somewhere between 2009 2022. That holds. We get a bounce, and maybe we end up flat to slightly lower, or maybe even slightly higher this week after that takes place. The fundamentals you can read about, and the long-term themes as well. I think it's going to be tough to get higher. Don't think we're going to crash yet. I do think that we're setting up once more to try and push lower before this is all over. Thanks for joining me. Have a great week. I'll talk to you later.